The world's largest online retailer projected operating income in the current quarter of $1.1 billion, $1.4 billion to $1.9 billion on revenue of $51 billion to $54 billion. Analysts had estimated operating income of $1.13 billion of operating income and sales of $52.3 billion. Loading the outlook reinvigorated enthusiasm for Bezos' strategy of leaving rivals in the dust by constantly investing in growing businesses such as data centers, voice-activated devices, and faster delivery of more goods. A series of critical tweets from President Donald Trump about sales taxes and U.S. Postal Service rates briefly blunted Amazon's stock market momentum earlier this year. Thursday's report suggests Trump's tirades were minor speed bumps, not big obstacles. Success is the best revenge that Bezos can get against the administration for its veiled threats about sales taxes and not paying its fair share, said Wedbush securities analyst Michael Pachter. Amazon shares jumped more than 6% in extended trading, after closing at $1.517.96 in New York. Amazon's outlook has sparked a run on its shares. Photo, Bloomberg first quarter sales for Amazon Web Services, its cloud computing division, jumped 49% to $5.4 billion, excluding currency fluctuations. It's the second straight quarter of accelerating growth for the profitable unit. Subscription services, which include Amazon's popular Prime offering, generated revenue of $3.1 billion, up 56% from a year earlier. Prime success. Bezos recently reported that the company surpassed 100 million Prime subscribers who pay yearly or monthly fees in exchange for fast shipping and other benefits like video and music streaming. The announcement signaled that the membership strategy that has helped it dominate e-commerce in the U.S. could be replicated overseas. Amazon has been losing money on its international expansion, with investments in India, Australia, the Middle East and Latin America. Amazon's global headcount is up 60% from a year ago at 563,100 full-time and part-time employees, thanks to a hiring spree and an influx of workers from Whole Foods Market. Big spender Amazon stock has outperformed the S. Its shares trade at a premium to many peers. The stock's price-to-earnings ratio is more than 11 times that of cloud computing rival Microsoft. Amazon Web Services (Oz), which handles data and computing for large enterprises in the cloud, saw its profit margin expand in the quarter. It posted a 49% rise in sales from a year earlier to $5.44 billion, beating the average estimate of $5.25 billion, according to Thomson Reuters IBES. That business continues to grow very well and has seen great customer adoption, said Brian Olsavsky, Amazon's chief financial officer, on a call with reporters. He added that costs related to data centers, fulfillment centers and other investments scale really well when we have high-volume quarters, like the one Amazon reported. The company has been notorious for running on a low profit margin. Yet its big bets on new services and entry into new industries have reaped shareholders' rewards over the past decade. Amazon continues to invest in a wide array of areas. The company plans to spend more on video content this year, including its renewed deal to stream Thursday night football games and a prequel television series to The Lord of the Rings in the works. Wedbush's Pachter estimated that content spending will be $6 billion or more this year, up from $5 billion in 2017. Earlier this year, Amazon announced a partnership with J.P. Morgan Chase and Warren Buffett's Berkshire Hathaway to determine how to cut health costs for hundreds of thousands of their employees. Loading it has been a turbulent week for the richest Americans in tech. On Tuesday, Alphabet spooked investors after first-quarter results sparked concern that the Google parent plans to go on a spending binge, punishing shares of Amazon, Facebook and Netflix. Bezos lost $4.6 billion that day, and Alphabet's Larry Page and Sergey Brin each lost $2 billion. Facebook co-founder Mark Zuckerberg, whose fortune dropped $2.5 billion on Tuesday, got a reprieve Thursday as his wealth increased by $5.8 billion, a day after the social network posted better-than-expected results for the first quarter. He leapfrogged Spain's Amancio Ortega, the billionaire behind the Zara fast fashion chain, to number 5 in the global wealth ranking. Bloomberg, Reuters.